The Indian economy stands on the cusp of explosive growth in the coming years, driven by a young population, a rapidly expanding middle class, and a thriving digital economy. This creates a distinctive opportunity for businesses and investors to harness the vast potential of this dynamic market. As we stand at the crossroads of a new chapter, the future of Indian markets holds both immense potential and intriguing challenges. The rapid transformation of the Indian economy, fueled by technological innovation, presents new avenues for businesses to explore markets. This is how experts have an outlook. So how do market analysts and experts present an outlook for Indian markets for the year to come?
The result season is over now, and the result season. Now there were few negative surprises, there were few positive surprises, but this time the negative surprise was higher. But there is one caveat in that. Now, whatever has happened in the Red Sea, our exports have not been impacted. And the commentary has been that next year will be very good. Maybe 1 quarter more of pain. Destocking will get over. Post which everybody is expecting a good FY25. So that is something positive on that. But we need to understand. We have 64 countries which are going to election. In that, I think 2 countries elections have been completed. One is Bangladesh and one more is Pakistan. So we have many other important countries election. Now we have Indian election in May. Nearing May we will have our elections, and US elections will be in November. So it is an election year. So that is something which is driving the market. So market feels that the ruling dispensation will get a majority. So that is why this rally is taking more steps. I think we are getting into euphoric valuation. Now I would not ascribe to numbers because this is the first time I am seeing mid cap, small cap, micro cap, and even as mini cap, anything which is less than 5,000, 10,000 crore is doing very good. And it is like a magic market. So I've never seen a mid-cap index performing or outperforming Nifty for such a long time. So PSUs have done well. PSU defense, power sectors have done well. Now banking has done well. See, there has been disappointment only in private banks because the cost of funds have gone up. So there is a NIM compression in private banks. But PSUs have done far better. That is why we see PSU bank rally. But in PSU bank also you need to understand there are banks which are they are trading at 1 time book. There are banks in same PSU which is trading at 7 times book. So as an investor they need to understand the difference. They have to buy stock where valuation is very attractive. That difference, if one can look at it. Now I think banks like State Bank of India, Bank of Baroda, Union Bank are few still value there, and they can do very good over a period of time. We need to understand, when you take REC PFC, this stock has not rallied for 13 years. And at certain point of time, dividend yield alone was more than 10%.
Okay.
So they have not performed in 13 years. So after the power reforms which was introduced by the central government, this stock has performed just about 18 months back. So, and when you compare with other PSU, NBFC, I'll give an example. IRFC, which makes a profit of only 6,000 crore. And the price to book at one point of time was more than 4.5. Whereas REC PFC price to book is still below 3 times. So if I do a comparative study, REC PFC they are not very expensive, but yes, they have done very good. Now at current level, risk to reward will not tally. But when it comes to State Bank of India, which profit after tax is almost 66,000 crore and trades at just 6 lakh crore market cap, it should be slightly higher now. It's still attractive. There are attractiveness in PSU banks, and that too in larger PSU banks, the valuation is still attractive. See, when we buy the largest company, you cannot expect a bigger return. Now, CAGR 12 to 15% return over a period of time is possible. But once the demerger happens, then normally the wealth will be created in Reliance Group, because you have a lot of business vertical. And you need to have multiple analysts to analyze one single stock. Now, there is telecom, there is gas, there is retail in them. You have so many businesses built around one group, that is Reliance Industries. So for anyone to understand, it is very difficult. Now they have demerged Geofinance, so that has become a different entity. But there are multiple business, which can generate a lot of wealth for investors if the demerger goes through. So everybody is waiting for a demerger. I feel so. Value is still there. It is not about value. We need to understand a few points before we talk about HDFC Bank. See, whenever any two major entities have been merged, they don't perform for 2-3 years. You take LTI Mindtree. They had a merger. We had many PSU banks getting merged. About few years back, they never performed in that 2-3 years time period. We have two large entities, which had almost 10% weightage each in Nifty. That is HDFC and HDFC Bank getting merged. And management wants to grow aggressive. The last year they have added about 1,200 branches. This year almost 1,000 branches they will add. Again next year they will add more branches. So when you want to grow aggressive, it will take a hit on your profit, and it will have some few things which will disturb them. So I think that is where things are not going great. But for a long-term investor, I think it is good. But we need to understand something which has given return in the last 20 years. It might not perform for the next 5 years. Which we have seen it happened in ITC, Hindustan Unilever. Hindustan Unilever never performed from 2000 2010. But till then, till 2000, it was a multi-bagger stock. So always, any company which has been growing aggressive, they take a pause, and the pause after 20-25 years of fantastic return, it might take 5 to 6 years for the bank to come back and generate returns. But it is for patient investors. It is not for investors who's looking at 2-3 years time period in HDFC at this point of time. I think EV is SUV sales last year data is saying 2023 data is saying SUV. Now the market share of SUV is almost 48% in the total passenger car vehicle. So when it comes to premium vehicle or premium EV vehicle, in listed space, I think Mahindra and Tata Motors are the leaders. And Tata Motor result was fantastic. You have a company where their global revenue is going to be 4 lakh total. Tata Motor revenue will be 4 lakh crore. I don't think hardly 13 companies are there in the listed space where their revenue will be 4 lakh crores. So I think it is a great company. And there was one data done. The highest spend for R&D or highest pattern in the top 10 Tata Motors is one company from India which is there. So we need to understand that it is a great company. So I think still the valuation is attractive in Tata Motors in that. And for Mahindra, it has become a holding company. We are not giving auto valuation. So once the holding company is done, we have a new management, and he understands these things better. So if he can demerge, holding company and auto company separate, then that is one more value creation. It will happen in Mahindra and Mahindra.